just briefly before the show, and I mentioned that I was personally very curious about what someone in your capacity that runs money the way you do, what does a day like today look like activity-wise? What are you watching? What kind of trades are you hoping to be able to place on, or are you looking at more closely than usual? Would this be a better than average day expectancy-wise for you? Just a little bit of color on your day-to-day activities and what a day like today might look like.
Yeah, so we're very quantitative and fairly algorithmic in our approach. I would say 60 to 70% algorithmic, and the rest discretionary. That's kind of a random number I'm throwing at you, but primarily algorithmic in our approach. 3 different strategies. I'll start with a long vol and vol neutral. Those two are relative value vol arb strategies. The difference between the two is vol neutral is neutral, vol, skew, delta, all the first order Greeks, and very much looking for relative value opportunity. Whereas the long vol is really biased to a range of long convexity, long vol, but still relative value. And that relative value pays for kind of your risk premia over time, and you get the benefit of that on days like today. So we have a expected, historically a positive expectancy in our long vol, which is very hard to do. Historically we've had great success with that. But again, it comes in more in bunches, and this has been a great environment for that, obviously. Even though long vol has underperformed as an asset class relative to market move, the short bias nature has definitely been helpful for us. And then relative value is completely non-correlated, and historically that does on the first big move. Spreads blow out, and it's correlated with liquidity. So you might have less positive performance on a big move down at first, but broadly secularly on an annual basis, those strategies do very well when spreads blow out and when there's more opportunity. I kind of explain it as it's akin to a market making type of operation, right? It's counter cyclical. That doesn't mean you're going to make money on a big down move per se, but relative spread opportunities increase secularly, and that's what the role that really plays. It's a non-correlated relative value type vol trading strategy. And then we have those are both relative values. So the capacity is low. They're high gross, low net leverage strategies. Whereas the dealer flow is a much more directional net position strategy, lower gross, and that's much more dynamic, predictive, looking at distributions of outcomes. Generally, our distributions are drawn weekly with daily path, and rebalance happens with predetermined rebalance points. That rebalancing happens about every 3 days or so. But we are intraday on bigger moves like today, rebalancing much more often, deleveraging, leveraging, and rehedging, and there's logic embedded for a lot of that. To the distributions that we model. So as you might imagine, there's a lot of trades going on in the background, a lot of models kind of rebalancing things happening, but there's also some discretionary elements where, myself and the other portfolio managers are deciding when another strategy overcomes in terms of profitability. We have the discretion to say, okay, look, we've hit a point where there's a better opportunity set. Maybe we take our profit and roll to the new strategy, or maybe we rebalance. And there's also a timing element to execution. Some of our execution is not all automated because in a liquid market, you don't want to just be firing everything into the market. So there's some execution discretion that happens there as well. So, we're definitely, hands-on in there, especially on days like today, very active, quite a bit of trading going on. But in terms of full rebalancing strategies and rebalance points, a lot of, most of that is predetermined. So that makes the decision making often much easier. You get to kind of just sit back and let things work to a great extent, especially when things are a bit calmer. That tends to be the case.